Dell is an interesting tech stock, especially as artificial intelligence spending booms and the one segment of Dell Technologies business, which helps enterprises establish data centers optimized for artificial intelligence, that segment of its business is booming. So, investors curious about Dell Technologies stock, what's a fair price to pay? That's what I'll answer in this video, conducting a discounted cash flow analysis of Dell. Let's get started.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So first, let me draw your attention to 2024 free cash flows of $5.92 billion is what Dell is estimated to have earned in 2024. That's forecast to rise all the way to $7.9 billion by 2029. From that point onward, I'm forecasting that Dell Technologies' free cash flow will grow at a transition period growth rate of 5.5% between 2029 and 2034. From 2035 onward, I forecast that Dell would grow its free cash flow at roughly 5% at the nominal rate of the growth of the US economy, not the real growth rate, which adjusts for inflation, the nominal growth rate, which does not adjust for inflation. So when I take the present value of those cash flows expected over the next decade, I get $47.4 billion. Then I need to conduct the terminal value calculation for the free cash flow expected between 2035 and infinity. Corporations can theoretically survive to infinity, and so you can take the present value of the free cash flows expected between now and then. So the terminal value arrived at, collecting all of its cash flows from 2035 onward, is $251 billion. But that's in 2034. I need the present value of that figure, which is $103 billion. When I add the present value of the cash flows of the next decade and from 2035 onward, I get a value of operations of $151 billion. That's the present value of the free cash flow that Dell is expected to earn for its existence. The discount rate that I used to discount Dell's future cash flows was the weighted average cost of capital of 9.3%. I applied a cost of debt of 7.5% for Dell, adding several percentage points as a risk premium to the government bond yield of 4.5%. The cost of equity came out to 10.2%. The company's beta was 0.95. I used a risk-free rate of 4.5% and a market risk premium of 6%. The market cap is $79.3 billion, and they have total debt of $25 billion. And so I gave them a target capital structure of 1/3 debt, 2/3 equity. And when I brought all that together, it gave me the weighted average cost of capital, 9.31%. That's the discount rate I applied to all of these cash flows going out to infinity. So let me draw your attention now to the middle segment with the value of operations at $150.8 billion. We need to add its cash balance to that total and subtract the debt. That will bring us to the value of equity of $131 billion. But we want to know the price per share. And so we're going to divide the value of equity by the number of shares of 716.455 million. And that brings us to an intrinsic value per share for Dell stock at $183. That compares well to its current market price of $101. And so according to my calculation, my intrinsic value calculation for Dell stock, it looks to be undervalued. Still, that doesn't mean that the current market price is going to, for sure, excellently go to $183 a share. Doesn't mean that at all. It could remain where it is and remain disconnected to my intrinsic value calculation for an extended period of time. This $183 per share is what I view as the company's value right now. So I would personally feel like I would be getting a bargain buying Dell shares at $101. So that's all this means. And I hope it doesn't lead you to a conclusion where you go off and you say, well, Parkev's calculation is that. This means that this is a no brainer and I'm guaranteed going to make money. That's not the case at all. So don't jump to that conclusion. Please conduct your own due diligence. Watch many more videos about Dell. I've got dozens and dozens of videos on Dell stock. Please don't make a decision on an investment after watching one brief 10-minute video. It takes a little bit, at least a little bit more research than watching just one video. And so this is just a information, something to incorporate into your analysis when you're making your decision. You want to incorporate more things, some qualitative factors. The valuation is only one out of 6 steps in my investing framework. And so I give this a 40% weight of my overall decision-making criteria. Valuation, that is. And this is one form of valuation. I also look at forward price to earnings, price to free cash flow, trailing 12-month price to earnings. I look at all of those in the valuation step in my 6-step framework. So this particular calculation should be a relatively small percentage of your overall, or of, I should say, of my overall decision-making criteria. I don't just take this number and then automatically jump to the conclusion that I need to go and buy Dell stock because this number was so much higher than the current market price, and therefore it's an undervalued stock. It's a no-brainer. I should just go out and buy as many shares as I can right now. I don't ever jump to that conclusion regardless of what this intrinsic value per share shows me. Even if this number, instead of 183, if it was 383, I wouldn't jump to the conclusion and just say, this stock is so incredibly undervalued. I don't need to do anything else. I need to just go ahead and jump and buy the stock. No, in fact, when I find a big disconnection like that, it makes me a little more cautious because I'm starting to think about, well, what am I missing? What makes my calculation different than what the market is seeing? And I try to find that reason why the market sees its value much lower than what I see the value. And I try to convince myself that the market is overweighting or underweighting a certain factor that I disagree with. And then I find that I identify the reason for the misvaluation, the opportunity, and if I'm convinced about that reason, then I will go ahead and then will I make the decision to buy the stock. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.